The purpose of trading is to make money and to win. To win at all of your trades. You probably won't win all of your trades, but you're going to do your best to do that. Um, and in my opinion, trading should be about consistent and good risk to reward setups. And so, depending on the trader's skill level, a risk to reward ratio will differ by definition from person to person. This is also going to differ because we as traders or investors value different things. Some people value fundamentals, some people value technicals, some people value sentiment, or some people value all three of those, or just a combination of two of them, whatever. But I think in certain times there are some really good setups that should kind of just hit you in the head. And you shouldn't really have to say, sit back and think about whether it's a good setup. I think at the very least, most people that are good at trading will agree that there is such a thing as high probability trades versus low probability trades. And at different points within the stock's history, there are going to be some better setups than others. For example, after a 5% correction, things like that. So if you have market leaders, especially tech, showing not just 5% corrections, but 20% corrections or 25% corrections, that should signal something. An alarm should go off when that happens. And there's two types of psychology that's going to emerge from that thought process. If a stock goes down 25%, a lot of people will start to worry. And a lot of people will ask why that happened. They'll search that stock's ticker symbol and then news right after that. And they'll read articles of why that stock dropped, followed by lots of opinions on whether it's going to go up or continue going down. And so this is one type of person. This is a psychology of a person who's easily manipulated. And it's oftentimes the majority of stock market participants that are like this individual right here. They follow news. They love trading based off of news. And they trade based off of how stock prices make them feel. Something goes down 10%, it's an automatic fear. They clench their fists and they hold on to dear life. There are other types of people that understand that that's a natural process in the stock market. No stock is invulnerable to 20% drops or 15% drops. It's going to happen. And so, like I said, this event will happen, and depending on the type of person, two different thought processes will go on in that person's head. So, the stocks I'm talking about, if you guys haven't figured it out yet, are Twitter and Facebook and Netflix. So these three tech stocks have all seen pretty dramatic drops in recent times. Some have come after earnings reports. Actually, they've all come after earnings reports, but they've also experienced drops after big news events, things like that. I also want to talk about Amazon in this list, but I'll talk about that last. But when you think about over the last few years, what have been the market leaders in stock performance and what's pushing the stock market higher? The first thing you should think of is FANG. It has to be, because FANG stocks are single-handedly the reason why the S&P 500 actually finished positive in 2015. These stocks single-handedly propel the stock market day in, day out. And when they have these corrections, it's important to kind of think about it, think about why it happened, maybe, but think about how you can get a piece of the action too. And the reason why these stocks are so powerful is because they're kind of the future. Amazon is emerging as the #1 online retailer in the world, and they're only growing and they're only buying out more businesses. They're thinking about new ways of delivery. Basically, Amazon is going to it's going to completely change the way we live our lives. It already has. And this is a market leader. Netflix consistently changing the way we view TV. They're making their own content. Cable as an industry is dying, and you're going to have these big market leaders such as Netflix and other content creators, even Disney's trying to get a piece of the pie, that are going to try to capitalize on the product and basically monopolize the entertainment industry. Facebook, such a low cost margin to run Facebook, and it's just a money machine. They have so many profiles that they're actually not even growing in profiles that much, because that's how many people have Facebook profiles right now. And they're just consistently getting ad revenue. The price to show an ad is consistently increasing. Facebook is the #1 social media giant, and they also own Instagram, WhatsApp. There's just a lot of potential to capitalize on that. And so these stocks, there's a reason why these stocks are leading, and so that's why money will continue to go in that direction. So when you have news come out or bad earnings reports, it should only be seen as a speed bump. At some point during the next recession, yes, these stocks will tank, as will most of the market. If these stocks are tanking, the entire market will tank. That's just the way it's going to go. But I don't think we're in a recession soon. I have reason to believe it won't be for at least another couple years, or a few years actually, based on some analysis I do. But let's not talk about that. Yeah, so now that we have our basis for why these stocks are so powerful, let's think about buying opportunities. So let's go ahead and look at some charts and talk about a few of these. So Facebook has recently dropped 20%. I want to say more than 20%, probably like close to 20. Yeah, so let's say 23%. From the peak to the trough, and currently recovering. This is a bullish engulfing pattern on the daily chart, so that's pretty inspiring. Weekly chart shows a really nice bull hammer, especially after this humongous drop. And so the only question is whether or not we'll make another lower low before making an all-time high, or if this is the bottom. If this is in fact the candlestick that we end up with, I feel like this would be the bottom. I'm not sure though. But it's not really important. The important thing to note is that with just two indicators, #1, RSI being oversold, and #2, just the fact that we dropped so much in a day or 2 days, that should signal something to you. So what I did is I bought some Facebook. Here we go. So Facebook currently averaged at 171 for shares, already up 3%. I plan on making at least maybe 10-15% on this pretty easily. But that's why it's so important to have cash available, is for opportunities like this one. So when you see a big FANG stock drop, something should go off in your head. Next we have Netflix, which, as I highlighted in my other video, has seen another lower low from this earnings drop. So I had some cash available, and I went ahead and I bought some Netflix. Netflix currently averaged at $3.39, already up 2.12%, and already up $7. This is actually my only purchase with Netflix, just one share. Just wanted to see how it goes basically. But again, RSI oversold, and we have in total, how big of a drop is this? Again, 21-22% drop like that within the matter of a couple weeks. Let's go ahead and take a look at one more, which is Twitter, which I have also purchased. Think about it. RSI oversold here at 24.6. Another bullish engulfing pattern just like Facebook, showing support at the 200-day moving average. Twitter. Let's go ahead and look at my position. So Twitter, I have 8 shares of, averaged at 31.64. Currently sitting at plus 4% already. So these are good risk to reward setups. You have stocks that have a history of price growth. You have an insane drop. Yes, it might be a matter of catching the falling knife, which is a pretty common saying. But I feel like that saying is a bit archaic when it comes to certain stocks. If we're talking about a biotech stock under $5, sure, that, think about it. Think about it before you buy a 30% drop on a penny stock. If we're talking about Facebook and Netflix and Amazon and Google, that should signal a different alarm. Um, and there's a possibility that you lose money on these trades, and if you do, you can't beat yourself up for that, because that's the name of the game, is setting yourself up with high probability trades. Um, so yeah, I want to finish up with an analogy from basketball. One of the best coaches in the NBA, his name is Greg Popovich. He's always about the setup of the shot and not the result of the actual shot. So if his team is the Spurs, so if the Spurs are actually getting good shots, getting open shots, running on transition, yeah, just playing smart basketball, he won't get mad at his team if it's a matter of just missing open shots, because those are all efficient shots. But if they're playing sloppy and they're shooting contested shots and they're not running on in transition, then that's something to get mad about. But the more that you recognize high probability trades, the better trader you will be, because though at some point you're only going to do high probability trades, and so you're going to win most of the time, and that's how you become profitable in the long run, especially as a trader. Yeah. All right. So before this video gets too long, I just want to say thank you guys for watching. I hope you enjoyed this one. And let me know what you guys think of FANG stocks. Are they dead? Are they kind of overbought right now? Are you a little hesitant to get in? Go ahead and let me know. Comment in the comment section below. But with that, I hope you have a great night, and thank you for all the support.